Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Our guest today is Richard Duncan, longtime friend. I came across his book, Dollar Crisis, which really resonated for me because I don't trust the U.S. dollar. And Richard, on top of that, is a macroeconomist. He lives in Thailand, and his viewpoint on the world is pretty unbiased, yet caustic. And every time I've had Richard come to my seminars in Phoenix, after he spoke, I had to put people on suicide watch because Richard doesn't hold back as to what is not working in the economy. And I was talking to Richard. I was in Thailand in '96 after the Thai baht crisis. And some of the best real estate in the world in Bangkok was really, really cheap. So my point here is Richard gives the bad news, but it's also good news for the entrepreneur. If you know what you're doing, if you can play your cards right and all this. So Richard, this guy Trump, he's a good friend of mine. He's talking about tariffs. What is your point of view on tariffs on whatever he's trying to do?
Well, so I can tell you, if he said he's going to put 60% tariffs on all the goods coming from China and 10 to 20% tariffs on all the goods of all of our trading partners. Now, this is going to be a disaster for China's economy because, as we've already discussed, China's economy is already in a severe crisis because of the falling property market. But if he were to, just for example, if he were to put high tariffs on Chinese goods and not put tariffs on any of the other countries in the world, just China, those high tariffs on Chinese goods would mean that China would be able to sell much less to the United States. So China would be much poorer. And China then would buy far fewer goods from Thailand and Vietnam and Germany and the United States and all the other countries in the world. So that would also depress the economies all around the world, just if he only focused on China alone. So that's what has all of the Asians very worried. And not only the Asians, of course, the Europeans and the Mexicans and the Canadians. So if that's a concern because of that reason, but also if there are higher tariffs, that means that the cost of goods in the United States are going to go up. And if the cost of goods in the United States goes up, there'll be more inflation. So recently, the Fed has been cutting interest rates. But if inflation starts to pick up again because of tariffs and because of deporting a lot of workers, then the Fed's going to start increasing interest rates again in the United States. And that's going to be disastrous for the stock market because the stock market there is so overinflated already. $50 trillion of wealth has been created over the last 5 years, a 40% increase in wealth. It's very bubblish. And tariffs could be the pin that pricks that bubble and brings about a very significant correction in 2025. Bond yields are already moving up very sharply in the US as well as the UK. We were talking about the UK earlier, but just over the last few weeks, the 10-year bond yield has shot up to almost 5%. It was expected to go down because inflation has been dropping, but in the last 3 months, it's moved up sharply. And because it's moved up, the dollar has moved up very sharply. And that's not what President Trump is hoping for. President Trump is hoping to make the dollar weaker so it'll be easier for American companies to sell their goods abroad. But right now, there's fear that there will be higher inflation, and so the dollar and 10-year bond yields are moving higher. And if bond yields are moving higher, that means mortgage rates are going higher. And so with mortgage rates going higher, that's going to weigh on the property market.
This is my question.
All of those things are related to tariffs in an indirect way.
I'm going to be in Vancouver, British Columbia this week at the VRIC, Vancouver Resource Investor Conference. And there's a guy named McGregor is going to speak up there about how close to war are we getting. Because as you know, Richard, there's money and war go hand in hand. And you threaten China, and you have our fleets all over the world. How close to war are we getting? And from your point of view as an American sitting in Thailand, watching Trump, he's a friend of mine, but he's a bully. He wants to get what he wants. But are we pushing to war, or is that too far pessimistic?
I'm very worried about U.S. national security, because even though China's economy is having a property crisis, that doesn't mean that China's government is slowing down its extraordinary surge in investment in new industries and new technologies. That's why they dominate electric cars and batteries. That's why they have hypersonic missiles and we don't. That's why they had 5G for several years before we got 5G. They are overtaking us technologically. And if they overtake us technologically, they're going to overtake us militarily. And this is happening very quickly. You know, this is what was happening in Germany in the early 1930s. Winston Churchill warned the world that Germany was industrializing and was becoming a very serious threat. Well, we're past that point with China now. China is neck and neck with us technologically. And if we don't respond by ourselves in the United States, investing more aggressively in new industries and new technologies on a very large scale, then we're really in danger of being conquered by China in the not too distant future. And so that's why I was so excited when President Trump announced on September 6th in a speech at the New York Economic Club that he was going to establish a U.S. sovereign wealth fund to invest in new industries and new technologies. And the main reason for doing that is because we could produce technological miracles and breakthroughs and ensure that China never overtakes us technologically. And meanwhile, that sort of investment would turbocharge U.S. economic growth and allow us to grow out of our economic problems. Rather than being sucked down into depression, we could have a major economic boom if we invest aggressively in new industries and new technologies. And so that's the policy of President Trump that I'm most enthusiastic about, establishing a U.S. sovereign wealth fund. Yes, I'm very worried about China, and every American should be. And that's why they should get behind this idea of the U.S. government financing a multi-trillion-dollar investment in the technologies of the future. That was what my most recent book was about, The Money Revolution, how to finance the next American century, how to drive the economy forward. We don't have to just grow at 2% economic growth a year. We can rev up the economy and make it grow at 7% a year. You know, America doesn't have to be a declining superpower. The first American century doesn't have to be the last. We have the resources to invest in our future and turbocharge economic growth and create such extraordinary technological breakthroughs that will rule the world for another century and beyond.
So that's macro. And again, it's Richard Duncan. His Macro Watch, I highly recommend subscribing to his work. But what can the ordinary person do? Like for me personally, since your first book was The Dollar Crisis, I don't know if it was the first book, but I read The Dollar Crisis. I never trusted the dollar. So I have gold and I have silver. I have a gold mine in Utah. I had a gold mine in China, but they confiscated that one, so I don't like China's anymore. I bought a lithium field in Canada, and I'm a resource guy because that's what keeps going. So when you look at gold, silver, and today Bitcoin, what are your opinions of that as hedges or as insurance against a dollar that might be coming apart?
So I wrote The Dollar Crisis in 2002. And at that time, gold was under $300 an ounce. So the dollar has lost more than 95% of its value against gold since then, I think. Yeah. And over the next 30 years, we're probably just going to see that trend continue. So I am a big believer in owning gold, and silver and gold more or less move together. I'm also a big believer in owning land, especially land with rental property on top of it, like a house. So you can buy the land, and land is as good as gold. They're not making any more land. So if gold goes up, land will go up. And meanwhile, you can have the rental income from your house every month. And if you have a mortgage and we have higher inflation, which is a real possibility, the higher inflation will eat away your mortgage and destroy your debt in a good way. And you'll become richer that way. So all of those things are things that normal Americans can do.
So ladies and gentlemen, this is why I trust Richard Duncan so much, is because he'll tell you straight. And like I said, every time he came to our conferences and spoke, We have to put people on suicide watch, but everything he says is coming true. Well, because, I'm a gold bug. And exactly this at around 2000, England Guy Brown dumped a lot of gold, and gold was pushed down to about 300 an ounce. So I bought a ton of gold coins, and then I just cashed it in I bought it for 300. I sold it at around 2,900, and I bought apartment houses with it. But that's what I do. I stay within what I know. And then I bought Bitcoin at 6,000, and I just kept buying it. And today I've probably a couple of million in Bitcoin. But I agree 100, Richard, it goes down as fast as it goes up. And so I was talking to a guy the other day about Bitcoin, and he says, "Oh, what happens if it crashes?" I said, you better not be in Bitcoin, because he doesn't have the stomach for it. I listen to Richard because there's always something good in the bad if you pay attention, right?
No, my education in bubblenomics was exactly here in Thailand. I lived in Bangkok from 1990 until 96. And at first it was a real economic miracle, but by the end of that period, it was such a super bubble. I'd become bearish on it. And the bubble did pop. And when the bubble popped, the Thai stock market fell 95% in dollar terms. And 30 years later, it still hasn't reached its high that it hit on the first day of 1994. And the bot crashed. The GDP contracted by 10% the following year. So that's where I learned about economic bubbles and what causes them and how to play them.
Thank you very much, Richard, for being a friend for all of these years. But one more time, we should talk about MacroWatch, how people can subscribe to your very important publication.
Thanks, Robert. So they can find MacroWatch at my website, richardduncaneconomics.com. Every couple of weeks, I upload a new video. It's basically me making a PowerPoint presentation. It usually has 30 or 40 charts. And I explain something important happening in the global economy, like recently the debt ceiling problems in the US and the risk that there's going to be a stock market sell-off pretty soon in the US. But I also discuss China's economy. I discuss the Magnificent Seven in a big series. And I really focus on the fact that credit growth has been driving economic growth and the part that the government plays in creating money to keep this bubble inflated by creating liquidity. So it focuses on credit growth and liquidity because the economy just doesn't work the way that it used to when dollars were backed by gold. The economy works in a completely different way now, and the government tries to control it. So MacroWatch explains in very simple terms how the economy really works in the 21st century. So I think your listeners would get a lot out of this. And again, if they would like to subscribe at a 50% discount, go to richardduncaneconomics.com, hit the subscribe button, and when prompted, use the discount coupon code 50% subscription discount.
Right. And I highly recommend subscribing to it because, like, definition of intelligence, if you agree with me, you're intelligent. I wrote this book here, Rich Dad's Prophecy, and this came out in 2013 or 12, something after the 2008 crash. And I watched what the Federal Reserve Bank was doing. That was Bernanke. And they printed so much money. So that's why Richard and I are joined at the hip there. We're floating on fake money, and we just keep printing it, hoping the bubble stays up. So that's why please subscribe to Richard's newsletter. Richard, thank you for being a friend all these years. And the thing I love about MacroWatch, he uses a lot of pictures, not words. So he has charts and graphs so you can see it in a picture.
Well, Robert, it was you who advised me that I should create MacroWatch 11 years ago. And I did on your advice, and it's been really fantastic advice. So thank you. You've been a great mentor to me.
We're an education service. I don't recommend buying Bitcoin or gold or silver or land or cows and all this stuff. We leave that up to you. But you need to have information so you can make better decisions. So Richard, keep up the good work, and we'll be back to see how it goes next year.
Okay. All right, let's do that. I look forward to the next time.
I want to thank Richard Duncan, and then please subscribe to his MacroWatch. He's a lot of graphs and pictures, so you get the big picture very quickly. He's very smart. And unfortunately, we're going into some very rough economic times, But the good news is when there's bad news, there's also good news. You can't have all of it. But to sit there fat, dumb, and happy and pretend your 401k or the stock market is going to keep you alive, I'm afraid that's not going to work, because I wrote this book, I think, in 2012 or 13, after the 2008 crash, and I could see this crash coming. So let me just say one more thing. We don't give financial advice, but we do recommend people study, because money, like it or not, money is a very important element of life, and most people pay no attention to it. Anyway, thank you to Richard Duncan, and thank you all for watching the Rich Dad Radio Show.